Got to. Hello and welcome to the Real Estate Show. I'm your host Nagaraj Annaiah, realtor and a mortgage strategist here in the Bay Area. Today, I'm excited to bring you a very special guest, someone who brings deep insight to the world of home financing. Please welcome April Earl, a seasoned mortgage consultant who's helped hundreds of families, maybe not hundreds, thousands of families navigate the ever-changing lending landscape. Whether you're a first-time buyer, investor, or someone considering a refinancing, today's episode is packed with valuable tips and strategies you don't want to miss. Hello, April. Welcome to the show.
Hi, Nagaraj. How are you?
I'm doing really good. Listeners, today we are not going to take any calls, but we'll be recording this show and we'll be playing it. So, April, let's start with a few things, right? Affordability, right? And interest rates. People, lots of concerns on the interest rates. How's the market doing today?
The market's been doing fantastic. Yeah, there's a lot of good economic news that's been going and really driving interest rates. So we're sitting in a nice place, and
Mhm.
hopefully they'll stay the same.
Okay. How are the rates so that can you give out rates for 5 year, 7 year, and 30 year also?
Yeah, so 5 year or 5 arm today is about 5.875%.
Mhm.
7 year arm, 6%, and a 10-year arm is 6.125%. And those are all 0 points. And 30-year fixed is sitting pretty low as well at 6.5% with 0 points.
Wow, that's a good rate. Like basically starting with 5.875. But a lot of home buyers, right? Like they're concerned with the arm. What do you suggest? Like it's in this time of also it is better to go with a 30-year fixed or arm rates. What do you suggest on that?
Personally, for me, I would choose the ARM. And I think for a lot of your clients as well, who are pretty savvy,
Mhm.
financially savvy, I think an ARM is a good option because they're not going to keep the loan 30 years. Either it's going to be a starter home
Mhm.
or interest rates are going to get better in the future within that period. So the chances are they're not going to keep the loan for 30 years. So why not get the benefit of the lower payments and lower rate?
Yeah, but see, experts are predicting the mortgage rates not will not happen pretty much soon, right? Uh, so what do you? But in that cases also, do you still feel like going on locking with arms are better now?
You know, the cycles for the mortgage rates are typically within 7 to 10 years,
Mhm.
but kind of being seven, and the rates cycle. So I still think it's a good thing that people usually do not keep a loan for 30 years. There might be some borrowers that the 30-year fix makes sense for, but I
Mhm.
would say the average borrower, they do not keep the loan, whether later they want cash out. I have that a lot too as the housing prices go up and they want to consolidate something.
Mhm.
So, the chances of people really keeping that loan 30 years are pretty slim. So, in that case, a 7-year arm might make the most sense for them.
Okay, but you might have seen the circumstances also, right? Like since I'm coming down to the because of the prices are plunging and people are talking about, but still somewhere is like it's not making sense because I'm looking. There are some buyers for me like who wants to buy for 1.3 million, but to be frank, prices are dropping, but I can't get any homes for 1.3 million. You don't believe it in San Jose, South San Jose, where most of the clients are looking for. Even for 1.3 is so hard to buy. Minimum, if somebody comes in, if they tell me like I want to buy in a South San Jose, it's so hard right now. Even not only Santa Clara, forget it. Okay, that's very close to Nvidia and others, forget it. Mountain View, that side. If you're coming this side, San Jose, the only people if wants to buy 1.3, because problem is a lot of our buyers they're looking for a facing of the home, they want the move-in ready home, all the and minimum 1300 square footage. If you're coming with that criteria, right, it's so hard. But did you see this? Because you might have seen a couple of recessions coming in around and going in, right? But did you see the same thing when it happened in 2008? Because I keep going back to 2008 because that's a perfect example. This is the reason the reason I'm asking is there's a lot of home buyers are panicking. A market will slump, market will crash, dude. I should I wait? Should I wait? What do
That
you?
2008 was such a unique animal because there were people that couldn't afford their homes because their arms maybe reset, or they didn't think that there was value. And that really wasn't in the Silicon Valley area. Some of the areas in Southern California were ground zero, and those were people that were lying on their tax, on their applications saying, hey, I make X amount of dollars, and they really didn't. So they couldn't afford it. And then they thought they didn't have any down payment down. So they had no skin in the game. So they were just walking away from these homes because they didn't feel that it was a good value because they got a loan for more that the home was now worth. So that was a completely different time. We won't have that again. We'll just have the normal cycles where things go up and down. But even in 2008, Silicon Valley really was fairly unscathed because of the demand in that market. So I would say that area being so in demand is really not going to fluctuate like other areas do, but it's not going to suddenly drop like that either.
No, but I think, see, now the completely market has changed. How the outlook also now being AI being in a boom, and I think if you look around every 20 years, there has been some kind of a boom coming in, right? Like 2000s was like more of a IT booms and other things happening, and even that time was the first time the all the internet, everything was catching up, which was going at very fast pace, and now it's a different boom. And if you look around 2000 to 2025, 25 years in a gap, you can see the pay is not getting down and the prices of the home is not getting down. And we are reading a stories like where Meta is poaching the all the AI, like basically all the open AI people or the employees with higher salary. And you can see the base pays are right now or what close to a 600K is the, maybe 400K is the base pay what I'm observing. And I know there are some start engineers who starts with a 300, but the difference is the RSUs income. RSU's income are close to what 700K, 800K. That's even for 4 years. I'm noticing in.
Mhm. Yeah.
And the minimum savings right now, any of the tech peoples are close to $1 million. Okay. That's all the outlook, and the home prices are 1.5, 1.6, then people easily will jump in. In in 10 years back, 15 years back, if I go, did you see the bank savings around close to 200K, 300K, April?
No, absolutely not. And
Now,
at that time, in a lot of cases, we couldn't even in certain circumstances use RSU income for qualification. Like that has changed a lot because now that's such a norm that RSU income is part of the package. So no, this is kind of a lot of new, it's a little different now for sure.
but since we are using more of a RSU income for a qualifications for going for such a huge scale, a big scale of purchases, right? Do you think that might be kind of one of the things which going to haunt us in the futures, because there are some chances the companies can go for from high to low very fast in this tech world.
Mm.
For example, the neo companies, there were a lot of hydrogen companies which were in doing really good, but one mistake they made go, right? In that cases, the diversifying, that's what it helps a lot.
Hmm.
Right. So, listeners, myself, Realtor Nagaraj Annaiah, and I'm talking to April Held from Loan Lock, and we're discussing a lot of about the loan options and other stuffs. And one of the things I wanted to check is what are the most common mistakes the first-time home buyers when choosing a loan, April?
I would say one, looking at the affordability of their options,
Mhm,
and what their plans are, choosing the right loan.
mhm,
Um, I would say choosing incorrect representation, either on their agent side or a lender that's going to perform for them, because in this market, things have to be done quickly. And then not communicating with your loan officer, like things like deposits that are going to be made. income, we have to work things out together. So no, the more that I know about something, the more I can mitigate any risks and just formulate a good solid plan up front.
Yeah, not disclosing all the informations for you, right? And I think a lot of folks, I see that they miscalculate their income. Okay, they making a good income, but always they make a mistakes. Like they can afford for a 1.4, but they always keep pushing around like I need to go for 1.3, 1.3, but which is you don't get a right homes.
Yes. And people do miscalculate their income. Often it's lower because people get paid every 2 weeks. So they say that their monthly income is their 2 week times two. Well, no, you're actually getting 26 paychecks a year. You have a few more. So people actually underestimate their income a lot of times.
Yeah, and I think because I was talking to you also earlier on this call, like one of the client, they want a 1.5 million. That is like what around close to Santa Clara border or like close to Campbell area. If I start looking for a 1.5 million, 3 bed, 2 bath, 1300 square footage, I can't find any home because even that 1.5, because this bias comes with a huge expectations, taking like I need all fun, all like all upgraded homes, good directions, everything. Even in that case, also, I gave an example of 1.3. Even for 1.5, I'm having a hard time because based on the zip codes, what you're looking for, based on the cities, what you're looking for, all the prices are so much going up and down. Unless you come up with like a lenders like you, like basically suggest them looking at the numbers, hey, dude, you can go a bit more. It's just a $500 a difference. So that way you can go and get a better homes instead of taking a compromised home and then later, no, no, I don't want to do that.
Yeah. I agree. That's one of the things that, because I'll pre-approve people and they'll say, oh, I want to go up to this, but they pre-approve for so much higher. So I think it's important to say, well, hey, this is how much more you're going to pay per whatever, 100,000 or however it wants to be calculated so that they can look at options to find what they want because everything's a trade-off. For 1.5, exactly what you said, you're going to have location, but you're not going to have necessarily all the upgrades or amenities and such on that particular house. So having at least the option of the different payments, then you know what you're looking at, and then you can make a good decision.
Yeah, because yesterday also I was showing some house to one of the client. They told me, Nagaraj, I'm okay. I want to stick for 1.2. Can you show me something? I clearly said this home is right behind the track where the Caltrain goes in. You can't even basically go stay or can't even sleep in the nights or like even in the other times because then we went, they realized so fast because the Caltrain went on the same time when we visited the house, then they felt, oh yeah, it's not possible. Somewhere, what are the compromises you need to make? That is very important. Not all the compromises will help you out.
Mm, yes.
That's what they need to be thoughtful, especially for home buyers around. And one more thing I want to talk about is the seller financing, right? Like a lot of lenders, a lot of sellers as a lower interest rates, let's assume like they bought it for lower interest rate. Now they want to sell. Okay. Can the new buyer, can they do a assumable? Let's assume the 1.5 million purchase, right? And the seller has around 600K left over. It's an assumable, and let's assume the lender is okay to give that assumable loan. The difference, will you be able to help them out as a all the other lenders can they help them out, or like they need to go with the same lender?
The only assumable loans that I know of right now are VA loans. And those get assumed at the whatever the amount is. And then you have to get a second mortgage on top of it if you don't have that, which is at a much higher interest rate. So in most cases, assumability is not going to be possible.
Okay, only few lenders if they allow it, but still the difference would be because then the next lender should come up with a they being the second lien, so most of the lenders might not be interested to do it.
You can do it, but it's going to be at a higher interest rate being in second position, no
Yeah.
matter what it is. So, because obviously home prices have gone up. So the blended rate isn't going to end up probably the same is if you just did a whole new loan on your own. And a lot of those, might be an adjustable rate HELOC or something on the, second position. You can do some fixed ones too, but those will be even higher interest rate than HELOCs. So I've kind of penciled that out for people in, other areas, and it just, in a lot of cases, doesn't make sense.
Okay. Uh, So you will do a lot of loans around California and you do more on the Arizona too. So what's the trend are you looking in like in this like are you seeing more downhill or like let's take an example of comparing the Bay Area to the place where do you stay and comparing that one to Arizona. Arizona's I think the prices are going down, right? Like how is the appraisals coming in the Arizona?
You know what? For the most part, fine. It's softened a little tiny bit, meaning that there aren't quite as much offers on each property.
Mhm.
And they can get seller concessions and things like that, which we usually cannot get in California very readily.
Mhm.
But it's even there is not suddenly like if you look at the appraisals, it doesn't say a declining market. It might be a few more listings and that sort of thing, but it's not even showing a declining market. It's softened a little bit, but not declining. So some of those areas are more realistic, within the country because Silicon Valley is its own little unique thing.
Mhm.
Um, but still in Southern California, you can't really get seller credits, concessions for closing costs either. So in Southern California. So,
Prices
I'm
have dropped a little bit, but it's not sitting in the market for a longer time. If the house is really good, it's not like sitting in the market like what?
correct.
It might sit for 2 3 months. Last week we had put an offer in one of the 95125 zip code. That house was sitting in from last 4 months. As soon as they reduced it to 1.599, within a week it sold. Within a week. By the time my buyers decide, no, no, we want to go 25,000, 15,000 lesser than list price, it went sold. So
Yeah.
it is not like too much less. It will gets like it goes very fast. Seller expectation, as I said, right now it used to be 10 to 15%, but I'm seeing the trends as the months progresses. I kept on saying in a lot of my shows, summer would be kind of bit slow nowadays, but as we close on to near to the August, then a lot of home buyers coming back from a vacation, which starts
Mhm.
going up again.
Yeah.
No, I think
Yep.
it's interesting market always. If somebody asks me, will this house sell for high or low? I can't guarantee anyone. Like it's because on the house things, how is the house has been kept? It's been kept for a longer time, better. All the things matters. The location matters. All the things. And yesterday also I was talking one of the condo market. I think we should talk about the condo markets also. The seller came into me, Nagaraj, last comparable was 1.27. Do you think this house will sell?
Mm.
No, it's not guaranteed on that being an HOA being higher. HOAs are 850. Do you believe that?
Wow. Yeah, they're a lot of them are higher now. And a lot of it's insurance costs too, because insurance went up so much as well.
Yeah. So, but if somebody wants to like right now prepare their finances before applying for a mortgage, so what all they need to be preparing for their finances for a mortgage if they want to apply for a mortgage in this market?
So what do they need to do with their finances to prepare
Yeah.
for a mortgage?
Yeah.
Definitely savings, a lot, definitely just having liquid funds. The market now obviously is, we're seeing things in the market doing a better and such, but sometimes it's a good idea to maybe liquidate some of that if you feel that that's to have that ready.
Yeah.
And really having the cash and reserves and stuff needed is a big portion of it because then you have a lot of flexibility.
Yeah, I think you well said, like having the reserves or like even basically selling your some of them stocks so that way you're not dependent because market changes so much. You saw that April was like what 10 15% drop, and that time if you had money, maybe that time was the best time to buy also. April, May season.
Yes.
Mhm.
I think, a lot of times, obviously, your financial planners, they put in money on, even if they're going to put it in the same stock, they may do it in different lumps over different days to mitigate the risk a little bit on the market. I kind of think that the same thing with the withdrawals. If you know that you're going to put a down payment, that's probably a good way to withdraw your funds as well. Do them on some different time periods to mitigate your risk.
Yeah, because sometimes you might it low, sometimes it might high. Maybe it will average out for you. Like the same thing happened for me also. It was there was needed of a cash, then I sold something low, but not didn't sell everything. Whatever is needed, only we sold it. That's how we needs to plan. But thank you so much, April, for joining in today. If somebody wants to reach out to you, what's the best way to connect with you?
Best number is 949-306-8100.
Okay. So listeners, if you want to reach out to me, it's the best way to go to nagrajhomes.com, click on a WhatsApp icon, and that's how you can reach out to me. I have a few listings coming up in Evergreen. It's a wonderful home that's going to be listed for 1.65 million, and one in Newark, one in San Ramon. If you'd like to know more about these houses, do reach out to me and text me or give me a call at 858-880-4577. Thank you so much, April, and thank you so much for all the listeners for listening to it. Thank you.
Nagaraj, happy holiday.
Happy holidays.